Midweek stock market update, and it is indeed skyrocketingly exciting. Right, you can see on the price earnings ratios, this is a measure of share price compared to future profits, future expected profits, that most things are expensive. You're paying a lot of money in share price for the future profits if you were to do a simple calculation. Now, that's actually too simplistic, obviously, because guess what? The ones in red are the ones which have been doing the best this year, as I'll show you in a second. Although my JP Morgan is now coming strong. Energy stocks as well have not done that well, though they're the undervalued ones. So we're going to keep an eye on those for next year. But for now, just a reminder, don't forget, when I go through the stocks I'm about to mention in this video, I will be looking at value, growth, income across 10,000 companies, cash flow, momentum, Sortino, Alpha, all of these things. Where does that leave as well? It's been another blisteringly good year. And you can see, blisteringly good week and year. You can see energy stocks have actually caught up, as have banks. And I've been banging on about it all year, saying just how cheap they've been. Although most of the money we made this year were in these, as you know, if you've been following my weekly broadcasts. Exchange traded funds, I've done a separate video on my YouTube on this, so do have a look at, I've got more coming, don't worry, alpeshpatel.com/links. But for the moment, what you need to know about exchange traded funds is bloody hell, they're healthy as well over the past month. You've got 20% gains in some of them. Well, what's been happening? The NASDAQ is now up nearly 54% this year. Speaking of which, I got a message from one of my Great Investments Program users. There she is, Hina. And she said, and this is the important bit, from January 2021 to date, my portfolio has risen 70%, which is amazing, as previously my portfolio was growing by 5% on average a year. My only regret is that I didn't completely listen to Alpesh and didn't sell investments when they dropped a certain amount in 2022 downfall. If I had done that, my growth figure would have been a lot larger. She joined the Great Investments Program in 2020. And on Alpesh's teachings, I completely transformed my portfolio. The reason I mention that is, and you can, by the way, see the full case study on my LinkedIn channel, on my LinkedIn here. All right, so do have a look at that and you'll see the full shebang. The reason I mentioned that is because there are just so many of you who have missed out on this. Now, there are a whole bunch of people who've messaged me who've got their pensions with their employers, and they're up only 20% over the last 10 years. And this is shocking, and it is worrying, and it is absolutely frightening how poorly people's pensions have done. If your pension isn't even keeping track with the S&P 500, which is up 24-25% this year, you've really got to ask questions of your IFA, and, well, basically you've got to sack them. Simple as that. So where are we on the S&P? I thought this was going to pull back. It didn't. It didn't make a difference because we were waiting for a pullback. It didn't happen, so it's fine. We continued making money. And the most important thing I've got to tell you is this, okay? And it relates to the MACD, and I don't use it the way the textbooks do. So for those of you into crystal balls, Elliott waves and Fibonacci, go away. This is the monthly MACD. Don't use it the way the textbooks do. What you need to know is if it's going up, that's good. If it's going up from roughly around or below the middle mark, that's even better. If it's sideways, that's not too bad, but a bit of an amber warning. If it's falling, that's pretty bad. If it's falling beneath its own moving average, i.e. the yellow line, as it did here, then you really shouldn't be sticking around. And this is what Hina was mentioning, that had she listened more to what I said about when to get out, then she could have gone into cash, because pension funds don't generally go into cash, and private investors then waste their time while the market's falling when they could have got in when it's rising and get the gains. So where are we on this at the moment? More importantly, where are we on this moment? Well, I'm still expecting at some point, and it's probably going to come in January the 1st, something of a bit of a profit taking, because you can't keep going up at this angle of inclination. You just can't. I mean, when has that happened before where it's risen that sharply? I would guess here. Then you go sideways. So if we do get a replica of that, and we might, then you're looking for a substantial gain. I'm not saying we're going to have another 50% rise in the NASDAQ in 2024 and a 20%, 25% the S&P, but I wouldn't be surprised if we did. But for now, this is bullish, and I'm happy with that because there's still a long way to go. I mean, if you look at it, we're only here. And when we were here before, we still had all of this to go. And we went from here to here. Okay, we still had twice as much to go. So can we go double? Yeah, we probably bloody can. It's ridiculous. So Apple, let's call it the Apple strategy: buy, hold, or sell. Now, where are we on this? Well, it's this is why I do a broadcast on Wednesday and Friday, because I don't know. January the 1st, everything could tank. It really could. How do I know? I can't see into the future. The market wakes up one morning and decides we hate everything. They could decide that, and they could ignore everything, because they do, and you've seen them do that. But for the moment, I can only go by what I can control. That's positive. That's positive. So the Apple strategy is that whilst I hold, I would buy more today. Okay, that is my Apple strategy. My Alphabet strategy is the same as the Apple strategy, because these also look the same, but a bit more cautionary there. And it's just taking a bit of a breather. It needs time. Okay, so it's taken a breather for, what, 6 months, gone sideways. Now, at the end of that, should resume back upwards. One hopes, one thinks, one expects, right? So that's still the Apple strategy with Alphabet. With Microsoft, also the Apple strategy. Oh, look, it's taking a bit of a break. Normally, it does this and then goes up, and this again might do this and then go up. So you may get a pullback, as you had here. But we knew not to panic. We knew to just keep an eye on it. Don't worry, don't panic. That's why people love these weekly broadcasts. They love them because I tell them, look, the monthly MACD is, whilst it's not rising, is going sideways, and it's not falling. And it's certainly not fallen below its own dotted signal line as it did here, which is when we'd worry. Okay, so here we didn't worry, we didn't panic. Well, I worried, but I didn't panic. And then, of course, it shot up. Now, it may well repeat this again, so be braced for it and watch these on Wednesdays and Fridays. But Apple strategy for now, definitely Apple strategy with this. I mean, bloody hell, Amazon. You're like one of your rockets, Blue Origin rockets. You are just basically, I'm going to retire earlier. I mean, I'm never going to retire, but if I wanted to, certainly got more trips to the Maldives planned, because this is just nuts. I mean, you know, this is why I got into investing. By the way, this, and then this is so reminiscent of this, and then this. So will we get this year? I don't know. We might get sideways. Let's not get greedy or overexcited. But at the moment, we take it 1 week at a time. And my 1 week at a time says, I'm happy with this. And again, Apple strategy, put a gun to my head, I'd buy more. Disney, we're still waiting. Look, don't think that everything I touch turns to Amazon type skyrocketing. Disney is a special situation. And it might teach us an important lesson, not to be greedy or complacent. And I like those lessons because it keeps our feet on the ground. It should do this. Just waiting. You're going to learn patience with this. You don't need patience with Amazon and Apple and Microsoft, but you might with Disney. It's a good lesson. Now, NVIDIA. The NVIDIA strategy is simply this. If it drops X%, you will sell Y% from its high. Okay? Whatever its high is since you bought it. Now, we got into this in, if you look at my Telegram, in January, I think it was 3rd or 5th or 7th, something like that. So we got it in the first week of January of this year. And it was partly to do with that lovely little pattern. If you're on my Great Investments program, you know each month I update all the S&P 500s, which are showing a similar pattern to what NVIDIA did, in the hope that they will, over the next 12 months, also give us a 250% return. If I could guarantee it, I'd be laughing, but I can't guarantee it, but it puts the odds in our favor, and we look at value growth, income, cash flow, and everything else. So this one's done this, and we continue holding the NVIDIA strategy. If it drops X1, we will sell Y1. Y1 is dependent on your risk appetite. Simple as that. Okay? So that's the NVIDIA strategy, which we, of course, apply to NVIDIA. People think it can go a lot higher, right? Tesla, well, that was a special situation in January as well. And the best time to join the Great Investments programs now, because in January, I'm going to do more of these types of picks. That was gone up about 200% this year. We got out when it fell off that because I wanted to ease back on some of my equity holdings, because if you remember back around, I think it was September, October time, it was looking a bit iffy was the market. Since when it's risen, and that's why I keep showing it. So I'm not got a position in it at the moment. I don't plan to buy more Tesla at the moment. Who knows? Things might change. But for the moment, they might change in January. So we'll keep that where it is. Meta, it shot up again, 52-week high. So now this is really important for those of you who are wondering why your pension is doing poorly, and yet your fund manager had Meta. The reason it's doing poorly is your fund manager had Meta amongst 50 other stocks, so they put very little money in Meta. And last year, they saw it go all the way down, and they didn't think to exit it as we did. after a 10% drop by about February. Because we had all these gains and we were damned if we were going to lose those bloody gains. But more importantly, we just looked at that. Remember what I told you in the videos? We just looked at that. And so we didn't have those falls. And yet these gains of 250% we could capitalize on. Why? Because we didn't have these falls to recoup. Whereas your fund manager has over the last 2 years got you a 0% return, even though Meta's got up 250%. Because they saw you dragged all the way down, because they're idiots. I used to be a bit more polite about fund managers and my fellow fund managers, but I'm fed up of it because I get so many emails from people whose pensions are screwed as a result of these fund managers, and they've screwed you over. They've just screwed you over. Okay, I'm sorry, they've screwed you over. So that's Meta. What have we got? ServiceNow, NVIDIA strategy, and Apple strategy. In other words, I would buy more if you put a gun to my head, and the NVIDIA strategy is if it falls X, you sell Y. All right, simple as that. Cisco, now that did fall off a cliff, and we said, well, everything I touch doesn't turn to gold, but let's wait on. And indeed, as has happened before when it falls off a cliff, because it does this, Shakespeare, it's like pattern recognition. It's probably going to do that, so I'm okay with it. And would I do the Apple strategy with it? No, I'll just wait a little bit longer, give it another week, and then we might do the Apple strategy with it. Netflix, I don't own, as I've told you, but I look at it because everybody else likes the look of it. And that's when we predicted, well, that's when we got in. Okay, we said 70% over 10 months, and well, it's certainly on target. It's on that run rate. Oh, and this, by the way, is what the banks think. So you've got that over there anyway. Okay, people, I think that's your lot. So do me a favor, have a look at my LinkedIn. You can find my LinkedIn, my TikTok, my Telegram, everything else on alpeshpatel.com/links. And you can send in your portfolio for me and my team to review as well. I do a nice little video. So do that as well. Thank you very much, one and all.